Welcome to Cocktails and Capital, the working on your business podcast that feels more like grabbing a drink with your best friend. I'm your host, Sarah Tatum, that best friend. I'm the owner of Tatum Accounting, where we invite our clients to take a vacation from their bookkeeping. In this podcast, I'm going to give it to you straight. Talking points and vague tips, we don't do that here. There's a bunch of noise out there in the entrepreneur community, especially when it relates to finances. And when you're trying to run your business, you just don't have time for that. And I know that you would rather be doing literally anything other than recording expenses and logging into your accounting software. So I'm bringing you practical advice without any of the fluff, just like your best friend would. So turn the volume up, grab your gin and tonic, and let's dive into this week's theme. Hello, best friend. Welcome back to Cocktails and Capital. It has been a very long time since we have gotten together, but we are back. It is season 2, episode 7, and today we are going to talk about the 3 things that I believe that you are wasting your money on in your business. So we're going to talk about what those 3 things are, 3 definitions of cost, and how we can kind of cut back on some of those expenses that might be variable or discretionary. We're going to talk about what those things mean and how we can save you guys some money. So to kind of talk about the elephant in the room, we had a very long season break here at Cocktails and Capital. So I kind of wanted to go over what the break was about. It was an unexpected break, but it was a mental health break for me. There was so much going on in the last couple of months that I needed to kind of take a step back from the podcast and from kind of Instagram marketing as a whole and kind of hand everything back to our marketing team over at Media Books Agency and just kind of work back in the business in itself and put some more attention on my family and on my personal life. And so everything is settled, everything's fine, like everything's great. And we're ready to get back in to the podcast and back on Instagram and pump out some really great content for you guys for the last half of the year. We are going to have a couple of webinars toward the end of the year, so please keep an eye out on our email list. If you're not already signed up for our email list, you can sign up through the link in our bio on Instagram or by going to tatumaccounting.com and putting your email into our mailing list there. We also have 2 really great ebooks out. One of them is brand new, all about saving money and running your business more efficiently through your bookkeeping. So be sure to check out all those resources that we have. We've also pumped out some great new blog articles. So be sure to check all of that out while you're over on the Tatum Accounting website. And I'm just really happy to be back and podcasting with you guys and continuing this conversation and being able to get back in here and chat with you guys and be back in the studio, quote unquote, the corner of my office. So let's take a real quick break. I'm going to sip on the cocktail that I have for just a second, and we'll be back in 2 seconds to talk about how we can cut back on costs and what the 3 main definitions of costs are. So we'll be right back. So there's 3 main types of spending categories, expense categories. And what we do is we classify those between fixed, variable, and discretionary. So those are your main 3. And fixed costs are those costs that do not change from month to month, and where they come from doesn't change. What I mean by where they come from is those are kinds of things like rent. So the rent on your retail space, the rent on your manufacturing space, things like your cable bill or your internet bill, things such as your the software that you need in order to operate your retail site. Those are all fixed costs. They do not change from month to month. The subscription on your Shopify site does not change from month to month. The cost of your rent does not change from month to month, and those costs are constant and they are fixed. and they're not going to increase or decrease based on fluctuations in spending or fluctuations in revenue, things like that. They're fixed costs. They're not going to change. They're stationary. So that is one type of spending category. The second type of spending category is going to be variable expenses. And variable expenses are those expenses that you will incur month to month, but the amount of money that you're spending will vary based on a lot of external factors. And this is pretty much your cost of goods sold that is mainly going to be affected by this, because that is going to be affected is going to be affected by things like freight costs, inflation, which we all know a lot about right now, and just the overall effect of having multiple parties involved in the distribution of goods, hitting the price that is set on the goods that you need in order to make your products or to sell your services. So when you think about things like cost of goods sold being variable and the amounts that it costs you, think about if you are a cake baker or you're making cookies for sale or baking macarons for sale at farmers markets. You are needing to buy ingredients for those baked goods. And think about how much the cost of your baked good supplies were 5 months ago before we saw this huge spike in inflation compared to what they are now. The cost of eggs even is much, much different than it was 5 months ago from inflation and things like the avian flu that is occurring than it is right now. The cost has increased significantly. So those kinds of things are going to be things that are your variable spending categories. And then finally, the third category is going to be our discretionary spending category. And discretionary is just like it sounds. It's those things that we spend money on that we maybe don't really need to spend money on, but we have the income, the disposable income, to spend that money. So those things can be like meals with our clients. They can be gifts for our clients. They can be things like if you're doing farmers markets or if you have a retail space, decorations for farmers markets, for your farmers market booth, or decor for your office, decor for your retail space. All those fun things that we want to buy for our business that make our business fun to have. Those are kind of those discretionary items. Like recently, I bought a standing desk treadmill for my office, and that is definitely a discretionary spend. I did not need to buy a treadmill for my office, but I, want to get my steps in when I'm just standing at my desk and just hanging out. So that was my discretionary spend for the month, but it was in the budget. It's in the budget, is what I told myself. So that's a very good example of discretionary spending. So those are the three types of spending categories, and all of those are going to hit different points of your income statement. So your fixed costs are generally going to show up under like general and administrative costs. Think about like where your rent is going to show up on your income statement. That's generally an admin cost. Things like payroll is generally a fixed cost. That's going to show up on your admin costs as well. Your variable costs, like we talked about, are generally going to be your cost of goods sold. So that's going to show up at the top of your income statement, right underneath your revenue, bringing down your revenue numbers and equaling out to your gross profit. That is something we talked about in a previous episode, highlighting the important information on your financial statements. So if you need more information about that, be sure to check out that episode. And then your discretionary spending is kind of going to be in different spots on the income statement depending on what that discretionary spending is and how detailed your income statement is in your chart of accounts. So things like your meals and entertainment is going to have its own category most likely. Office supplies, the walking treadmill for your desk is possibly going to have its own category. And yeah, things like that. So those are, that's typically where those things are going to show up on your income statement. Now, how do we kind of analyze these costs and cut back on these these figures so that we can make sure that we're not spending too much money on the variable and the discretionary spending, and also the fixed spending. There are ways to analyze the fixed spending and make sure that we're not spending too much money. So what we kind of do, especially here at Tatum Accounting, is we do things like cost analysis, where we take a look at the market averages and we compare them to what you're spending, and we do a bit of a market cost analysis and see where you're trending based on your spends, your spending, your expenses. We'll do an income statement review to make sure that you know your net income numbers and your gross profit numbers are trending the way that they should be. And we'll also do some inventory review to make sure that your inventory is selling the way that it should be, that we're not having things that are trending to be obsolete or can't be sold, anything that could be damaged or holding you back from selling, that your inventory is priced well to meet the variable spending that you have on your cost of goods sold. And there's a couple other things we can do with like forecasting. We can make sure that you're staying in budget with budgeting services and things like that. So that's kind of how we help with cutting back on the costs. And those are some things that you're able to do as well with, especially with things like cost analysis and income statement review. So let's talk about the three main places where I think you should focus your efforts on saving some money, cutting costs, reducing spending, and how I think you can do it. All three of these are going to be either discretionary spending or variable spending. Fixed spending is something that's a little bit harder to control when it comes to things like rent or your subscription costs that are necessary to run your business, like things like Shopify or things like your email marketing service and things like that. Those are things that generate revenue and they create a customer base. They create that sense of connection with your customer base. And those are the things that you want to maintain, and you want to budget for those things. So those fixed costs are a little bit harder to control and to reduce, but we do want to budget for them and we do want to allocate funds for them when we are budgeting and looking at our overall revenue and our overall spending. So don't forget about those fixed costs. Do analyze them, do take time to look at them and give them some thought, give them the foresight, see if they're trending in an upwards manner. And if they are trending in an upwards manner, take some time to see if there's a more cost-effective route and maybe a cheaper option out there. But the three that we're going to focus on are going to be either variable or discretionary. So the first one is going to be when it comes to cost of goods sold. So your supplies or your materials that you need in order to produce the service that you're providing or to produce the product that you're selling. So like we talked about earlier with the bakers or the creatives, makers of the farmers markets or the storefronts, those are going to be the people who are most affected by things like variable spending and their cost of goods sold. When we take a look at your variable spending, we want to kind of see the trend in the market for how much your ingredients are increasing and what we can do to kind of cut back on that spending, just to keep going with the food maker example. But what you're going to want to look for is increases in the cost of your ingredients and your packaging supplies and things like that. And if there are cheaper options out there, better suppliers out there who are at a cheaper rate, or even comparable suppliers who are at a cheaper rate, it might be worth going and reducing your variable spending by going with someone who is at a cheaper rate. What you don't want to end up doing is compromising your quality for price, because at that point what you're having to do is do a cost-benefit analysis and ensure that you're not going to sacrifice the quality of your ingredients, which then sacrifices the quality of your product. and reduces the amount of overall revenue that you could potentially be earning because people will not be wanting to purchase your product at that point. So these are all the factors to kind of consider when thinking about reducing your variable spending on your cost of goods sold, with just one example on a baker's perspective. The second thing that we're going to take a look at is going to be another variable spend, and it's also kind of discretionary, but subscription costs. So we kind of talked a little bit about those things that are revenue drivers or community builders when talking about things like your email marketing server, your website, or Shopify. But there's other subscription costs that might not be so necessary, and I'll use my own business as an example. We have a ton of subscription costs in Tatum Accounting. If you looked at our income statement and you saw our subscription line item, you might be a little blown away. But it's pretty high. It's a good chunk of our budget, but we do a lot of marketing and we have a lot of subscriptions for our accounting side because we use apps for, calculating sales tax accurately, forecasting, QuickBooks, all our other accounting software, and general just apps that help make our business run more effective and smoothly. And so there's another subscription that I have, though, that is probably the least used and least revenue driving or community building for me. And that is going to be LinkedIn. So I pay $54.99 a month for LinkedIn, and I cannot tell you the last time I actually logged into LinkedIn to do anything in there. And I canceled it once, and they were like, let me give you 2 free months, and we'll drop it down after that to like $30 for a month, and then you can have it back up at $54.99. I was like, sure, whatever. I'll log in at least once in those 2 free months and get back in there. I have not. And so it's on my to-do list to yet again go in there and cancel LinkedIn because it's not serving me. That is a discretionary spend that I really don't need. So when you think about these subscription costs, think about if this item is serving you in your business and if you're really using that subscription. And if not, think about how much money that subscription really is over the course of a year. $54.99 over a whole year is a lot of money. And that is money that honestly could just be revenue in our pocket. So take that as you will. Analyze your spending on your subscriptions and really think about if it's necessary and it's driving revenue or building community. And if it's not doing either of those things, is it really doing anything good for your business? And the third and final thing is going to be meals. Now, meals are definitely more of a discretionary spend than anything else. Meals can be budgeted, and especially if you have a business where you're meeting lots of clients, you're taking them to lunch and having meetings and things like that, those are definitely considered more of a variable spend in that instance, and they should be budgeted for. There should be funds allocated for that spend. When it comes to those meals, though, think about where you're having your meal. I'm not saying that you should at all eat McDonald's or Taco Bell for every single meal. Like, we want to be healthy, we want to nourish our bodies and everything. But what we do not want to be doing is going to, there's this really great restaurant in Jacksonville, Florida called Three Forks that has like scallops wrapped in bacon that cost like $30 a piece. And that is not the place that we want to go to, just as like a prime example, or like a steakhouse or a place that serves lobster with, garlic butter and things like that. So think about where you're going to eat. Even like a Longhorn Steakhouse might not be the best place to go for your nightly dinner while you're out traveling for business. Think about how it's going to affect your bottom line, and think about who you're entertaining, who you're wining and dining, quote unquote, and where exactly the meal needs to be had in order to make the good impression. Can the meal be a little bit cheaper in order to best serve that client, or can the meal does the meal really have to be at the nice, fancy, expensive restaurant in order to better serve that client or to better serve you while you're traveling away on business? So all of those things are really just those conscious decisions that we make that can really affect the amount of net income that you have at the end of the year. And that is all that I have for you today on the 3 main types of spending and a couple of different options that you can take a look at on your income statement to try to cut back on your spending. If you guys have any questions about anything we covered in the podcast today, please send me an email or feel free to send me an Instagram message. I will be happy to answer any of your questions. And I will see you guys next week for episode 8. I'll talk to you guys soon. Bye. Thank you so much for listening. If you enjoyed today's episode, be sure to subscribe and follow Tatum Accounting on Instagram. You can also do us a huge favor by leaving a review. It's the best way to support us. Let's catch up next week, same time, same place.